Hey, welcome everyone to Story Trading Weekly Meetup. We've got an awesome presentation for you tonight, this Memorial Day weekend, Monday night. First, quick disclaimer, Story Trading is not an investment advisor and investing in securities involves significant risk of loss. We are recording this presentation. Will be provided to our paid VIP members this week exclusively, and then we'll be distributing this out on with our distribution partners later this week, Friday afternoon. So, our agenda, we're going to do a quick macro review first, looking at the charts, discuss how we found a tradable bottom, because I think we nailed it last week. Then we'll discuss, is this a bear market rally or is the bottom in? And if it's just a bear market rally, where's the top? We'll spend 5-10 minutes max on that, and then we'll move over to the feature presentation tonight, ticker symbol PLAB by Tony in our community. Some of you know him by Why Not in the message rooms. And if we have time, we'll have open discussion and Q&A. So you want to stay tuned for all of this. We got great slides for everybody tonight. So first, quick macro discussion. And I'm going to show you how I use multiple pillars. You know, Story Trading talks about the 4 pillars: sentiment, catalysts, fundamentals, and technicals. I'll show you how I found combined multiple pillars to find that bottom and take some awesome, do some awesome trade executions this past week. I've shown this chart the past several weeks just to illustrate that the biggest moves in the markets often come during bear markets. These are single day moves here, 14%, 6 to 14%, big, huge moves. We haven't even had any that has hit the top 20 yet. I suspect that we will by the time this is all over. So I do believe we're at the beginning of bear market rally number 2. I was looking for like a chart, historical chart of the magnitude and the number of bear market rallies from the dot-com bust. I couldn't find it. You can always rebuild it yourself from charts, so maybe I'll have to manually do that. But I heard that there were 7 major bear market rallies in the dot-com bust, and up until last week, we've only had 1. I believe number 2 has started. So let's dig into that. So how did we know that was coming? So first, we were setting the stage with technicals. I've been talking a long time about that 200-week moving average, and you can see on this 5-year chart how it came close to that support line on a couple of occasions, and that was the bottom, right? Never touched it, came close. Now, if you combine that with RSI right here, oops, it's not perfectly placed, but right here, you can see 1, 2, where's my mouse? Here we go, right there. 1, 2, and 3. And you can see the third one right here exactly matches these 3 levels. So that was one technical indicator that got me to think, all right, let me look for an excuse, right? Let's look at the fundamentals, the catalyst, the sentiment, and see if we can get a rally here, because historically, this has been a technical level, both in terms of the proximity to the 200 and that RSI exactly at the levels where it bounced, where it marked in the past the bottom. This time, I think it's a bottom because fundamentally, I think we're in a different place, but we'll see. The other thing I was looking at is this chart's the SPY. I will also show you the QQQ, but the MACD was a very reliable signal here. The MACD flipping from red to green was a very reliable signal from bear market rally 1. So when I saw this flip, it was last Friday, when it flipped from red to green, it got my radar up, even though there was like a lot of bad news coming in with Walmart and Target and Cisco. So this got me to pay really close attention. And you can see right there, that reliable signal on the MACD flip led to a bear market rally, the first one in this cycle, which was an 8.8% modest rally over 11 days in the SPY. Now, that was a smaller bear market rally than the other indices because SPY is a lot more stable and it's come down the least. Now, if you look at the QQQ, same thing. Now, the daily MACD was on a 1-day delay. That came on Monday rather than Friday for the Qs, right? So it was worth it to monitor that and see what happened there because Qs are the ones that are really getting killed much more than SPY. And again, it was a reliable signal for bear market rally 1, where it was a 17.7% rally over 11 days. Now, I didn't take the time to put an ARK chart, ARKK, but I did the math. So what about risk assets? And, you know, a lot of risk assets, whether they're microcaps, biotechs, non-profitable companies, they all trade together with ARKK. So ARKK actually rose 38% in 11 days, just back in March. That is massive. And I remember that, and I kept that in mind as far as my executions. I'll tell you what I did in a second. But that's the technicals. That was setting the stage. At story trading, I like to look at the other pillars. So let's add in sentiment and fundamentals. And we're going to look at this chart. I'll tell you how this all played out. So the first thing was May 11th, we had lower CPI for the first time. Now, when you play catalysts, right, I put add sentiment and fundamentals, but we can add catalysts, a fourth pillar over here. Oftentimes what you have is buy the rumor, sell the news, right? Or in bear markets, it's sell the rumor, buy the news, right? So if people are selling in anticipation of that big inflation data to come. So the play is, you know, it bottoms out right before that number comes, and even better if it's a good number. Now, so because of that, I actually closed out all of my hedges at the close, like 3:55 p.m., right before the CPI numbers came out the next morning. I'm like, let me get out, and I think that's a reliable way to play the catalyst here. And what happened was it missed estimates by a little bit. I think it was like 8.4, or 8.2 they wanted, and it came in at 8.3, but it was the first time it was lower than the previous month, which was 8.5. So while I got a negative reaction on that first day, because it was lower than the prior month for the first time during this entire signal, I stuck it out. I did not panic. I did not jump back into a short position. I kept all my hedges closed, and I said, maybe it's just going to take a little time for this bear market rally to begin because the technical indicators were so strong. And there we go. It happened a little bit late, so I was happy that I stayed long and didn't have any hedge on. So bear market rally number one attempt started, and you see that ran for a couple days before you got this terrible couple days of news from Walmart, Target, and Cisco, and it just killed that bear market rally. We got to a lower, lower than this low over here, right? We got to this low level on Friday, but then we closed very sharply green at the end of the day, which was significant because on the last like 7 Friday, and I think the SPY actually closed green barely on that day. This is probably the NASDAQ, yeah. But the SPY, I don't think the Q closed green, but the SPY closed green on Friday, which was like the first time in 7 weeks it closed green. So that was significant to watch. But then, so I was like, all right, maybe it's just so oversold, right? This thing is just so oversold. That's why we talked about the RSI, the MACD. So no matter how much bad news is thrown at it, it's like a rubber band. You know, we're going to get this rally, and then snap came. And I interpreted snap like much of the rest of the street did that morning. So I was very bearish. I put my hedge back on that morning in pre-market, actually. I bought a nice amount of PSQ that morning, and I'm like, man, this thing has got to go retest and possibly go below the prior week's low, that Friday low over here. So I was very bearish in the morning fundamentally, right? So the fundamentals here are really bad because Snap is warning that the macroeconomic situation is deteriorating faster than they had planned for or expected. It was like a month later, and that's alarming. When things are moving faster than expected, that's actually something that moves markets, right? Because markets move based on expectations. So if something is accelerating or decelerating faster than expected, it could move markets. So things started falling, right? Sharply. A lot of market participants saw it the same way. It was the talk of the town. The snap was impacting everything. But look what happened at the end of the day. It turned out that the low on that day was higher than the previous day's low. And I came out that evening after the close and I said, hey, everyone knew how bearish I was in the morning, but I was actually very bullish because of that close and because we didn't hit a new low, because to me, the news was so bad that it warranted re-rating to a new low rapidly, like within a day, not multi-days, but that day, right? Fundamentally, it's got to go to a lower low, and it didn't, right? And the fact that it didn't caused me to remove all of my hedge. Here we go, higher low, major signal. And this is just a fact of, you know, when there's bad news and you go up on bad news, basically, right? Or you don't get a lower low on bad news. This is one of the facts of the psychology facts of trading, that it's a signal. It's not necessarily a technical signal. It's almost like a psychology signal, right? So we got that because it's qualitative, right? To judge whether it's bad news. So we got the higher low, and I got rid of all of my hedge. When I saw that, I'm like, all right, yeah, I was bearish this morning, but I got to respect the process. I got to respect the history. I got to respect this major signal that the markets want to not set a lower low and start rallying. So in after hours, I sold off all my PSQ after we confirmed that close did not get to a lower low. And the next morning, I got into RK calls, right? RKY, because I told you earlier, I had the 38, it moves the biggest, right, when you have a bear market rally. So I was convinced at that time that we're heading for a bear market rally because we already set the stage with the great technicals. Then comes in all of this sentiment and catalysts and fundamentals and market psychology and everything combined that got me convinced we're on bear market rally number 2. So that's how all of that developed. Now, big picture, if you look at it, bear market rally number 1 from March 15th to March 29th, the SPY moved 9%, 17% for the NASDAQ, 38% for RK. Bear market rally 2, which is 7 days into it right now, SPY 9%, same as before. NASDAQ 11%, RK 18%, but not necessarily. That's just one thing to look at, the magnitude of the moves, but you got to look at the charts and catalysts. It's a whole big picture. That's one data point to look at. Okay, so the big question everyone's asking, is this just a bear market rally? And the answer is we won't know for sure until months after the fact. I have my opinions, right? I think it is just a bear market rally. So because of that, I will be selling certain things at resistance levels. I'll be quick to jump back into PSQ, you know, et cetera. You guys play it the way you want to play it, right? But we're not going to know for sure until months after the fact whether it's just a bear market rally. But fundamentals, I think, for the generals, Apple especially, remains overvalued. And you combine that with poor sentiment and regarding geopolitical risk and inflation. So I personally will assume it's a bear market rally until proven otherwise. But it's notable to maybe point out that even if Apple kind of warrants and crashes or whatever it is that takes the NASDAQ down, I think it's possible a lot of bottoms are in for certain stocks, right? You got to go stock picking to find them. And there's a number of situations where I think the bottom may be in. I think I called out GLBE just because of the tremendous, crazy volume on GLBE after earnings. And it was a sharp red to green reversal. Dario, I think the bottom may be in because of fundamentals that are changing over there. I think there's an inflection point there. So while Apple and the rest of the market might go down, I think possibly over the next months or maybe even quarters, it could be time to stock pick in certain stocks. So I've already been doing that. So where can this go if it is a bear market rally? Well, it's important to understand that bear market rallies are fueled by short covering, right? So it's not, people are still suspicious of the fundamentals. So a lot of this buying is not people buying for long term. It's just short covering and traders jumping in on to take advantage of that. So I think the short covering is unlikely to overcome the technicals. Short covering and the fundamentals, basically, the core fundamentals and any catalyst coming are unlikely to overcome the technicals. So we have to look at the technicals to see where this can take us. So I see 3 resistance levels here. Right here, resistance level 1, you can see all of these candles here where it found support. It's like 1, 2, 3, 4, all the way going back here to like April or so. So I think that is your most near-term resistance level coming up soon. Then you got another resistance level with the 50 DMA and then the 200 DMA, but you got to look at the RSI. I love the RSI, by the way. You got to look at the RSI as well, MACD, other signals to figure out where that top may be. And again, I don't know, maybe I'm wrong. Maybe it's not a bear market rally and the bottom is in. I doubt it, but anyway, if I miss it, that's fine. You know, I can always jump back in later at a higher price if I'm wrong, and I'm happy to do that. So with that, I want to quickly here, we're going to pause the recording in case anyone has any questions or want to add anything to this macro discussion before we move on to the feature presentation, PLAB. All right, and make sure, guys, to follow us on YouTube and on Twitter at StoryTrading. We're also now on Spotify at storytrading.com/Spotify if you want to hear these recordings audio only. I found it very convenient. I just listened to one of our videos for the first time using Spotify, and it was a lot easier to do that in the background audio only instead of a YouTube. So thanks everyone for joining us. Thanks for the collaboration and the great questions from the community here and Sanjay. So we'll see everyone tomorrow morning at 9 a.m. We'll do a quick quick pre-market prep, and we'll collaborate with you guys in the room.